Let's start the session. I hope my voice is clear and I hope everyone can hear me. And hope my screen is also clear as well. So let's start today's session. And today I want to talk about more on most of you, depending on the time we're in right now. We have got different things going on in the market, different things going on the world, like which is mostly we've got different wars going on, either on different continents, including America, including Asia. Different continents are involving in different wars. So from there, we will also be impacted if the market, like if different things are happening in what economy, to simply mean the economy will also be impacted, like what represents the world's economy or what represent entities or countries' economy, which is currencies, they will be affected in the market. So clearly, if they will affect the market and we are traders, we do trade the markets, to mean we're also going to be having effects, or we're going to be having impacts in the market. Depending on whatever going on, like there will be differences, there will be changes in the market, whereby the world clearly, or political, geopolitical conflicts, they clearly affect the market. So today we're gonna look after these impacts of the war or geopolitical conflicts on the forex market. What does the war in general affect the forex market? You get my point. So today we're gonna talk about two different things, like key factors of war which affects the forex market, like the key war factors which affects the forex market, and how as traders, or how the traders should they respond to the conflicts outcomes, or how should we react to them. You get my point, right? So don't mind about the drawing I made here. This was just a drawing. I was just trying to waste time from here. It's also reminding you that I'm an artist. You should also. I'm not only a trader. I'm also an artist. Like if you visit my Instagram, you get to know more about my art career. You get my point. So let's go ahead. That's not our concern today. This was just wasting time. So let's go ahead with today's session. So now, as I have clearly made two key points right here, two general points, or two general titles we're gonna talk about in today's session. This will be key war factors that affects the forex market in general. The war or geopolitical conflicts, these are among the most powerful drivers of the market. Like they increase or they add volatility in the market, whereby if different countries are involving in the wars, like if we have three countries they're involving in the war, maybe say we have US dollar, we have Rwandan francs, we have euro, for example, to simply mean if euro is involving, like if euro country, like countries which uses euro, and countries which uses Rwandan francs, and countries which uses US dollar, they're involving in a conflict, like to simply mean they have a conflict in between them. So to mean their currencies, their economy will also be involving in the conflict. You get my point? If these different countries, they do correlate, or they do share exchanges. Maybe if there is imports from Rwandan francs to US dollar, or US dollar to or euro, like there's different currencies they are involving. They have correlation in normal, and if there's different countries they have conflict, to simply mean that their impact or their performance will have impact on it. Either one will gain value or we appreciate over another, or another one we depreciate over another, depending on the war effects, what is going on, what is the war affecting, who is the war favorizing, who is the war not favorizing. From there, the differences or the impacts of the war will affect the performances of these currencies. So the performances of these currencies, the impact of this on this performance of the currencies, we also read to a general impact in the market, whereby if US dollar is involving in the, maybe say US dollar, which is like which is which is a general representation of USA's economy, and Rwandan francs, which is a general representation of Rwandan economy, and economy representation of Rwandan. To mean, if euro is a currency, this is a currency. Maybe let me say if it's a currency used in let me say German, let me say in different any country which uses euro, or any country which uses Rwandan francs, or any country which uses US dollar, if it have involved in a conflict, and maybe let me say for example US dollar is gaining value, or either the war is favorizing US dollar to gain value over maybe Rwandan francs, or either US dollar is losing value over Rwandan francs. For example, maybe Rwandan francs is gaining value over US dollar, depending on different factors. We're gonna look after these different factors, which we might depend on, or we might look after if we want to know the direction. How will we as traders react to the impacts of the market? This is what we will look after on the last on the at the end of the session, where first of all we want to check what are these impacts, what are these general impacts or general factors which affects the market, the forex market, and how should we as traders respond to them, how should we trade, how should we take the opportunities to trade over them. You get my point? So these currencies, since the currencies reflect to economic health, or political stability, or maybe investors' confidence of a country, to say if, I have clearly said it, in general, we already know that the countries, like currencies, they do depend on economic health. They do also depend on political stability, just external factors, internal factors, political stability. They do also depend on investors' confidence. To simply mean that investors' confidence, to simply mean that we all know that even the countries, like from the countries always tries harder to to the countries always tries harder to to invite or to attract investors from coming to invest in the country, so that maybe they can increase chances of the economy to rise or to gain or to appreciate, due to the the confidence the investors they have, due to maybe let me say the peace, or the peace in the country. If there is no war in the country, or if there is security in the country, the investors they will feel confident to come and invest into the country. So to simply mean that local currency or the economy of that country will rise, due to what the investor if the investors are finding security, are finding uh finding peace in the country, so they will feel confident to invest their money. You get my mind? Unlike investors feeling unconfident due to maybe wars or different factors, which might lead to them not feeling confident, or even withdrawing their money from even where they have invested, due to what insecurity, wars, and such kind of things, right? So to simply mean that the general country's economy, or the currency, always depends on these three things. Also, political stability, to mean if a country if a country is like a better government, like the rates are good, everything is on point, to mean it will also affect the currency, right? If there is a good governance in the country, it will clearly affect the economy's stability. You get my point? So these three things we already know in general is three things. These are internal things which affects or which the currency, which reflects on the currency. Economic health, which comes with political stability and investors' confidence from external factors from people from different countries feeling confident because of the security which is in the country, or either feeling inconfident because of this wars or insecurity in the country, and they might not even think of coming to invest in that same country. To simply mean the economic health of that country won't gain value globally due to what there is no foreign investors which are coming to feel to invest in the country so that they can contribute to the currency's rise or to the currency's appreciating due to different external factors coming into the country. You get my point? So these three factors they clearly depend or reflect on the countries, I mean the currency's health. You get my point? So we have got now different if we have got this because I first of all had to explain these three things for you to get what I'm gonna be explaining. These are general things we all know, right? I think everyone knows this. A country's economy depends on, I mean, the country's currencies, they depend on economic health, political stability, and investors' confidence. These are the most things which I think, which I base on. These are the three most things which I base on for you to know, or for which rates to the currency's appreciation or the currency to gain value in the country or the economy to keep gaining value. If these two things goes opposite to mean the currency will decrease in value or it will depreciate. You get my point, right? So we have got different factors. We have got different factors which affects the forex markets, like whereby we now want to involve only talk about wars, which mean want to talk about insecurities or war or conflicts. How does these things affect the market? This is what we just want to focus on in this session. So we have got different factors which affects the market, and we clearly want to first of all talk about uh, just the risk. We first of all want to talk about the risk behind the insecurities or war or conflicts, like to simply mean that first of all, if the wars happens to mean there will be insecurity in their countries, like they will want to be peace in the country, to simply mean that also they're clearly gonna be unsafety or a risk sentiment. Let me talk about to clearly mean the population or the people inside the country which are being affected by the wars, they're gonna be risk sentiment. Obviously, they are gonna panic. They're gonna try harder for them to try to pull out their money out of the risky assets and move to maybe safer investments or maybe even move out of the country. You get my point? For example, if there is a war in a certain country, to simply mean all the investors or all the people will try to withdraw their money from the banks, right? To simply mean they will try their best to withdraw their money from their banks because there is wars, there is insecurities in the market. To simply mean that what if maybe these banks or they will maybe be banned or they maybe be stopped working for say, a certain period of time, and some people are holding millions of money or millions of dollars or millions of certain currencies of or millions of local currencies in these banks, to simply mean that they're gonna feel that scaredness, they're gonna panic, they're gonna try harder for them to remove their money from these banks, to remove their money, to remove uh their to try their best. There is sentiment like they will try their best to protect their capitals. They will try their best to protect their money. They will try their best to protect their economy. To simply mean that them removing money or withdrawing money from these banks, this will lead to local, like this, the local currency or the currency that the country's economy or the currency, the country's currency will clearly try to depreciate. It's gonna set off. It's gonna sell off because like peoples are selling their things. They are selling their assets. They are selling out. They were putting out their money. They're withdrawing their money. If maybe USA is involving, maybe let me just give an example of US dollar. If US dollar is involving in the country which uses most of the countries which uses US dollar is involving. Let me even not say US dollar because most of the time you will find US dollar gain value in such conflicts. Let me just talk about maybe let me even talk about just Rwandan francs, for example. If Rwandan is maybe involving in a war, for example, uh, people will try their best to sell off their assets from Rwandan francs, to try their best to even keep money out of Rwandan francs. You get my point? Such because they are feeling the risk. They have that risk sentiment that they are feeling that Rwanda francs is gonna lose value because no one is looking after Rwandan francs. No one is coming outward. No external factors which coming out after outwards for them to come to invest in Rwandan francs because there is a war, there is a certain conflict which is affecting Rwandan francs to lose value. To mean, if we are trading the Rwandan francs, to simply mean that if everyone is selling their assets, to simply mean that the market will fall. From the analysis, from what is going on, the local currency is gonna fall because there is no factor which is gonna help or which is gonna favorize Rwandan francs to gain value. So to simply mean that everyone, like there will be sentiment of everyone will be feeling the risk of that the Rwandan francs is gonna lose value. So from there, what will happen is that uh, everyone will try their best to sell off the market. Everyone will they will try their best to remove their money from the markets. You get my point? They will try their best to remove their money from these assets. So to simply mean that the market is gonna sell off. From here, the market is gonna start selling. You get my point? So what does it mean by a currency selling? To mean if we are on Rwandan francs and US dollar, to simply mean that if Rwandan francs is our base currency and it's depreciating or it's losing value, to simply mean that the whole currency pair will be selling. If we have this currency pair, so we will be selling the market because we have analyzed clearly that from the risk sentiment, from what we have felt from the country, we're gonna be selling the market. Clearly, we're gonna be selling the market because of Rwandan francs, which have been our base currency here, is selling. To mean the whole currency pair is selling. Now, it doesn't mean every currency pair will be selling. Let me say if it's US dollar, Rwandan francs, to simply mean that if US dollar is our base currency, now have become our base currency, and now Rwandan francs have become our core currency, and the Rwandan francs we know that it's losing value, and US dollar it's gaining value. To simply mean that on this currency pair we will be buying will be buying because of what Rwandan francs, which you already know that it's losing value, it have now become our core currency. So to clearly mean this currency pair will be buying. So the action we're gonna take from it, this we're gonna be buying this currency pair. It doesn't mean we're gonna sell everything which involves Rwandan francs. No, we have to determine is it our base currency? Is it our core currency? You need to understand this. We all know this about the currency pairs, right? What is our base currency? What is our core currency? You get my point, right? So what we have right here is from the population sentiment, for the risk sentiment, people feeling that the market is gonna lose value, the currency is gonna lose value. Clearly, if most of them they have Rwandan francs, they're gonna sell it off to buy another currency, or either others if they have uh like to simply mean that if they have uh uh US dollar, no need for them to invest in Rwandan francs. So to clearly mean Rwandan francs is gonna keep losing value because of what? Because of what is happening inside the country. Because of the insecurities happening inside the country. The ones who are holding Rwandan francs, they're gonna sell it off, which will bring to the market to keep falling or to keep depreciating. And the ones who are already holding other currencies and willing to invest in Rwandan francs, they won't have that idea of investing in Rwandan francs because of what? Because Rwandan francs is already losing value from what? There is wars, there is insecurities. So no external factors which will come in the country to do what? To invest in Rwandan francs. So this will also lead to Rwandan francs to keep falling, to keep losing value. So depending on the currency pair we have, we're gonna be selling Rwandan francs. If Rwandan francs is our base currency, so we're gonna be selling the whole currency pair. If Rwandan francs is our quote currency, we're gonna be buying the whole currency pair. Get my point, right? Is it clear from here? So let's go ahead. Risk sentiment, we have got risk sentiment, people feeling that the market is gonna fall, like from what is happening in general. You get my point, right? So we have also got a minute. Let me create this. We've also got trying to also understand like which are these currencies since the market, since we want to, like, in real life, since the wars are going on here and here, like which are the bait, like what is the safety after the people finding the risk, like the risk behind the market selling off or the currencies losing value most of the time from the proven or from the past records, we have, from the different wars which have been happening on the world, we have found that it have been proven that there are these safe haven currencies. We call them safe haven currencies. This most of the time they tend to appreciate during global uncertainty or during global conflicts or during different wars going on in the world. We have found that clearly that US dollar, I guess Japanese yen, and I guess Swiss francs also, CHF, US dollar, Japanese yen, and CHF. Most of the time, these currencies have proven that they have been gaining value most of the time during the what different global wars, like maybe wars which connects America, which connects Asia, and different other countries. Yeah, and different other countries. Most of the time, US dollar, Japanese yen, and Swiss francs have mostly been appreciating during this periods of time. So we might find most of the time US dollar gonna be appreciating during this period of time, Japanese yen as well, Swiss francs, CHF, most of the time. So from there, like for example, for example, the reason why I said CHF, US dollar, and CHF from the past, this war of I guess Russia and Ukraine. I guess yeah, Russia and that was 2023, right? 2020 around 2023 somewhere there. You have seen that US dollar, and for those who was active in the market, US dollar and CHF was performing perfectly during that period of time. US dollar, US dollar, US dollar, and CHF was performing well during that period of time. It was appreciating. That was around 2022, 2023, during Russia and Ukraine. Around 20, that's 2023, right? Yeah, somewhere there. US dollar and CHF. So these are most of the time US dollar, JPY, and CHF. These are the currencies which mostly used to appreciate during these global wars. You find most of the time these days we're gonna be focusing on US dollar, JPY, and sometimes okay, we don't trade CHF, but most of the time we're gonna be focusing on US dollar currencies, JPY currencies, and sometimes CHF. We don't trade CHF most of the time, but we're gonna check on some opportunities available on CHF countries. You get my point? So from there, it's because we're gonna also find the reason why they mostly tend to perform better because I'm gonna also explain it. Just make sure you if you don't also get if you have a question or you don't get some things, make sure you ask questions. So we have also um like the commodities prices like commodities prices commodities prices like I guess oil, gas, wheat, and also gold. I mean, yeah, also gold, yeah. Oil, like oil, there's global commodities, like there's global commodities. There's commodities which you know they are highly imported, exported and imported in the world. We have got oil most of the time, oil and gas and wheat, and also sometimes gold. Let me not talk about wheat and gold, but then we clearly know more about oil and gas. These are the most things which are exported and imported in all over the world. So how will these two things affect the market? How are the commodities prices gonna affect the market? First of all, to understand this, if let me just give a clear understanding on this. Commodities prices, like there are countries which produce these commodities. First of all, we have two different sides. There are countries which produces these commodities, and there are also these countries which inquire or which demand these commodities. You get my point? So to me, they are the ones they are the ones who produces and send to these countries. To me, there are gonna be two different currencies. There are gonna be currencies on this point, and there are gonna be currencies which are demanding. So to simply mean that those who are producing, they are gonna be exporting. They're gonna be exporting these commodities to these countries, and those who are demanding, they are gonna be importing. Is it clear? They are gonna be importing these commodities inside the country. In general, we all know that importing and exporting, these things clearly affects the country's economy, or the country's stability, economic stability. If a country is exporting, depending on the commodities prices, if these wars are going on, and we clearly have seen that oil and gas, these are the most things which are mostly exported and imported. These are the most things which are clearly in use during these wars. Even most of the time, it's all over the world. Currently, these are the most things which are every time used. Oil is always needed, fuel, gas, and different kinds of things, right? For the performances, or for the industries working, for even for these cars, for this whatever going on the world, they clearly need oil and gas. So these are the things, these are their prices. If their prices are rising, or their prices are lowering, they will clearly affect the market. They will clearly affect the economy, the world economy. How? If the war, if there is a war, to clearly mean they are gonna be rising of the certain or in this rising in prices, or in these countries which are demanding, which are importing these commodities. They're gonna be rise of in these countries which are gonna be importing, because there are gonna be hardships in importing. Like there are gonna be hardships in trying in importing cost, because of the wars. Importing cost. You get my point? Like most of the time, in these countries which are producing these commodities, or these countries which are producing wars, these currencies, their currencies, it's gonna gain value due to rising of these prices. The prices of oil and the prices of gas, if it's gonna spike, the prices of oil and gas is gonna rise. So from there, these countries which are exporting these commodities, their economy is gonna gain value. It's gonna appreciate because of what? Their economy is gonna appreciate because of what? The production of oil and gas it's gonna rise. Yes, either it rises, or like the production, yes, is gonna decrease due to the wars, leading to also the prices to rise in the due to export to these countries. The prices of the oil and the oil and the gas is gonna rise, leading to them rising the exporting charges, rising the price of the oil and the gas. You get my point? Due to production, also the production have increased in value. So from I mean have increased in prices. So from there, oil is gonna rise in prices. So from there, what is gonna happen is exporting these things from these countries is gonna ask those who are importing or those who are buying these commodities from that country to be charged a lot of money or to be charged higher rates for them to export these things out of their country, the country to import them into their country. So to simply mean that from here, these countries which are producing these commodities, they will gain, their country will gain value or it will appreciate. It will appreciate. The economy will appreciate because of what the prices gonna rise. They're going to rise. So these countries which are demanding, so to mean the importing prices will gonna also rise. So if the importing prices are gonna rise, to mean they're gonna be needing a lot of money for them to import these commodities in their country. So from there, what will happen is their currency is gonna weaken. Their currency is gonna weaken. To mean they are needing a lot of their local currency for them to import these commodities in their country. To mean their currency is gonna lose value. You get my point? Their currency is gonna lose value. It's gonna depreciate. You get my point? Their currencies is gonna depreciate. So now, as I had to explain this for you to understand the commodities prices, how commodities prices, like how the prices drops and how the prices rises depend on the different countries. It's you to just know which countries produces oil, which countries produces gas, and what are the currencies they use, and what are these currencies with these other ones who imports they use for us to know, for you to know which one is gonna gain value. In exporting, those who are exporting, their currency gonna gain value. These ones who are importing, their currency is gonna lose value. Is it clear? So if you clearly understand that now, uh, let me give now an example while we are trading or while we are analyzing the market. If US dollar, if US dollar, which is the US dollar, which maybe let me say USA produces oil or gas, and then they're exporting oil. To simply mean that US dollar is gonna lose value, gain value, and maybe let me say if let me say just let me just give an example. Still Rwanda and francs, Rwanda and francs, for example. Rwanda and francs, Rwanda imports oil. It imports oil in the country. To simply mean that the imports will gain or the rates will rise, leading to the Rwandan franc to also lose value. You get my point? Leading to the Rwandan franc to lose Rwandan francs to lose value. So to clearly mean from this currency, we're gonna buy due to what? Due to our base currency is gaining value, our core currency is losing value. So we're gonna buy. So clearly mean if Rwandan francs have become our base currency, it is losing value because the one which we have correlated with, which is US dollar, is exporting these commodities. So to simply mean it's gaining value. So from there, we're gonna be we're gonna be selling this currency pair because Rwandan franc, which have been our base currency, is losing value. So we're gonna be selling the market from here. You have seen, right? We have got a key factor. I'm talking about a key factor, and then I talk about how as traders we should be responding to them. You get my point? I'm gonna also explain at the end of the session, I'm gonna explain how we're gonna be taking, like, depending on the live news, what is going on live, how we're gonna be taking action on the market live from what is coming out live from the market, from the world, or like from the world news, or from the, maybe let me say, like Trump just say that he's gonna strike this, such kind of things, how they're gonna be affecting the market. You get my point, right? So we have also got um we have maybe talked about also like capital flows. whereby let me delete this. I hope it's getting clear. I hope it's clear. Like you're clearly understanding. Like as traders, we should be literate enough to know whatever going on. Like we don't have to be just traders, whereby uh someone said they can't see the screen. You can't see the screen. You can't see the screen. All right. I hope so far it's clear. Like it's getting clear. As I was saying, as traders, we should be literate enough to understand every single detail of the decision we make in the market. You get my point? Like we should be literate enough. Good as well. It's better you have also a better mentor. I have all the skills regarding such kind of things, whatever goes on in the world. Like I always try to be updated regarding such things. You get my point? Like if it's how does this conflict affect the world? Like from the past wars which happened, how did it perform in the market? What was the result or what was the outcome in the market, and what should we expect in the upcoming wars? You get my point? So from there, that's why I also have get to also to let you know, to give you full details, full informations about what I know and what I have experienced, to also have that clear understanding in the market, which is different from a lot of traders who just come and they just trade, they don't know whatever, like they just trade, just trading, nothing, they just don't know anything, they just trade. That's why you find themselves like they are not like sometimes their losses they don't even understand, like they're not able to adapt themselves during, depending on the time period of the market. They're not able to adapt, they don't know when to trade, they don't know when not to trade. Remember, sometimes there is times I tell you this is not a period of trading forex. I guess in around February, January, I had a time period of time whereby we stopped trading forex for like almost a month. Almost a month. As a trader, you should always be ready, and you should always be capable enough to know, or to be flexible enough to know what is going on in the market. You get my point. So going ahead, uh we talked about the risk sentiment on how the population determines, or how the population feels that fear, or that risk, or that fear of losing their money or losing their assets, and start selling off whatever they have from that local currency, or either the commodity prices. I clearly explained how the commodity prices they affect the forex market, whereby these countries which exports, which mean these current countries which produces these commodities, their local currency will gain value, whereby these countries which demand these commodities, or which imports these commodities, their currencies will decrease in value, or they will depreciate due to prices of this commodity. So going ahead, I maybe also we also talk about the capital flow, which is also which is also almost the same as risk sentiment, whereby like the local currency, the people will try their best to sell off their things, like whereby the capitals, like the country's capital, or the capitals within the businesses, or within the different assets in the country, or in that local these countries which are facing insecurities or war or conflicts, they will try their best to sell off these people, they will try their best to protect their capitals, so the market is going to sell off from there. Like this currency that's going to sell off, like they will try their best to sell off to sell off their currencies, their country, these assets from far away from these local currencies for out or these local countries inflation. So from there, what is going to happen? It's going to lead to losing in value of that currency or depreciating of that currency. And most of the time, you will find even the government may freeze the forex reserve or even limit the capital flows. For example, from there you will find maybe if you was supposed to withdraw 10, maybe or to transact 100,000 in a day, you will find yourself you're only transacting 10,000 in a day. You get my point? Like even the government will try their best. They will even sometimes freeze like some forex reserves or even remit some capitals, like some capital flows, for example, whereby sometimes you won't be even able to withdraw your money. So this kinds of the things they will lead to the market, they will lead to the economy to the economy to fall. They will lead to economy falls, leading to also to the to the investors to invest in others in these economies or in this uh in these safe haven currencies which we have seen US dollar, we have seen JPY, Japanese yen, we have seen Swiss francs. Most of the time US dollar will gain value most of the time in this conflict, in this insecurity times of insecurities or war or conflicts. Most of the time it will gain value. Most of the time it will gain value. US dollar most of the time it will gain value. So from there what will happen? There's USD currencies. USD is gonna gain value most of the time. There's currencies holding with US dollar, they will lose value. You get my point? Is it clear? From what? From different things which is happening in the local currency inside the country, whereby the local people, the people themselves, they were gonna try their best to go far away from their country's inflation, where if their currency is gonna lose value or is gonna depreciate, they're gonna sell off their things to go far from what? To go from the inflation into their country's economy. Also, the government also will try their best to protect their currency by freezing some of the forex reserves or either even limiting some capital flows. Get my point? So from there, uh, it's gonna also lead to interest rates, like interest rates and central banks reactions. We all know that what is the use or what is the general function of the central banks. The general function of the central banks, they try their best to protect the economy. They try their best to protect the economy or to improve the performance or to protect the economy of the currencies to fall from foreign. They try their best. Central banks, they try their best to stabilize the country's economy or to stabilize the currencies. So from there, the central banks, what will be the central bank's reaction? Central bank's reaction in this time period of insecurities and wars and conflicts, most of the time, you will find themselves, central banks, they will try either to lower or raise their interest depending on the economy shocks, for example. Maybe depending on the production, for example, on the production of commodities, maybe production of commodities in countries which produces these commodities, maybe the prices of production, if the prices of production rises, leading to this exports rising in prices and imports also rising in prices, leading to these countries which produces the commodities to rise in economy, like raising to appreciation, and these countries with importing these commodities leading to depreciating of their economy. From there, central banks, they will try their best to stabilize, to improve, or to stabilize, to increase, or to involve instability of these currencies or of this country's economy. So what will be there is they will try their best either to raise interest rates or either lower interest rates, which will lead either depreciation or appreciation of this country's economy. So if appreciation, if the interest rates, uh, if the interest rates are increasing, to mean it's also part of protecting the currency, right? If the interest rates are increasing, to simply mean that uh, it's gonna improve or it's gonna play a big role in increasing the value of the currency. Lowering the interest rate will also lead to decreasing in the value of the certain currency. So if one currency is clearly raising gaining value, like an unproportional, let me say, is gaining value, and a certain currency also losing value with a big difference, an unproportional difference. So from there, the central banks, which is their role to stabilize the economy, they will try their best to decrease, to lower the rates, or either to increase this interest rates from these countries for them to try their best to protect their countries, their currency. You get my point? So if a currency is gaining value like unproportional, or either is losing value unproportional, it will clearly affect the country's economy. So from there, central banks will try their best either to lower or raise their interest rates for them to try their best to stabilize the country economy. So this will affect also the forex market, since we already know what happens if the currency loses value or if the currency gains value. We're gonna buy sell if it loses value, we're gonna buy it if it gains value. You get my point, right? So from there also, we have also got when we already know that if there is wars in different, like if there is wars on the world, you will find most of the time find different entities, like maybe USA or either other different countries. You're gonna hear most of the time saying these have been banned. For example, there was a war, like there was a conflict between Rwanda and Congo. There was a conflict between Rwanda and Congo. You remember what happened, right? They there Most of the things was banned in Rwanda. Even some of the things was also banned in Congo. To me, these things affect these bans or these sanctions, which leads also currency manipulations. These sanctions of like this banning, whereby you find most of the time, like maybe let me say, if uh if the sanction if a sanction, or maybe if they have limited Rwanda from trading, maybe this, like from maybe a trading from trading companies, or maybe they have limited Rwanda from trading, or from even creating accounts maybe in different currency, I mean different companies which trades. So from there, it might also lead to also countries to freeze, like to freeze their forex. Like for example, if Rwandan francs is not tradable, if it's a currency which is not tradable, maybe on derivative or whatever, you will find, for example, it will lead to high liquid. What we call high liquid means that's this country, the currencies which you can't trade, because uh they are present local, they are present in their country. They are banned, or they are like, due to these insecurities, they are banned in trading world or in trading companies. So from there, it will lead to what? It will lead to illiquidity of this country currencies. Illiquidity means they are untradeable. So to mean they are gonna be affected in the forex market because of what? You can't trade them. They are banned because of their insecurities. There was in these countries. You get my point? So from there, all these things, they do affect the market in one way or another way. It's a matter of you to just understand that the forex market is clearly what happens in the world economy. You get my point? We have seen how risk sentiment affects the market. We have seen how Commodities prices affects the market. We have seen how capital flows affects the forex market. We're also seeing how the interest rates or central banks reaction trying to lower their interest rates or they're rising the interest rates to stabilize or to protect the currency, how they also affect the market by what? By understanding what happens if the countries if a country gain value loses a currency loses value or a currency gains value. You get my point, right? Is it clear? Like, is it getting clear? Like, is it, uh, let me know first of all. Like, is it clear? Like, are you getting it? Like, muri kubyumva neza. Like, biri kumvikana. Is it clear? I've used different, uh, I've used different examples for me to, for me to get to, for me to get to explain it properly to everyone so that you can get to understand what clearly goes on or what clearly happens most of the time when you when the wars are going on or these conflicts are going on. So now I want us to clearly talk about now uh how should as traders how should we respond to such conflicts? How should we respond to such conflicts? As traders, how should we respond to such conflicts? Most of the time, because of the war, most of the time uh you will find the market is gonna be more volatile. It's for us to just be to keep up being updated by live news, whereby, for example, you will find maybe some battles, maybe like Iran have have struck Israel or USA have struck Israel is some live news like that, right? You will find most of the time once these news are out, you will find they will affect the market in one way or another. Because if we are active in the market, if we are active in the market, like being active in the market, like for us to get to get to catch or to get to take advantage on such news, like it will ask us to be updated live, like to be updated on live news or what is going on in world economy. In what like in these conflicts, what are these conflicts talks about? Like most of the time you will find they will even talk about like like US oil have did this like this such kinds of things, right? Getting updated with live news. Get my point? Or being quick to even adapt, especially uh, during the war. Like most of the time, you find breaking news. Most of the breaking news are gonna coming out, or even sometimes there's Trump's Trump's uh, Trump's tweets. You find this most of the time. You will even find just a Trump tweet. You find it moving the market from nowhere. You just Trump tweeting like this is gonna happen in a few couple minutes of time, and then you find boom, the market is spiking from nowhere because of what the traders are will be active enough to be updated live on what's gonna be happening in the market. To mean maybe USA is gonna strike Iran in 1 hour, like something, some examples, live examples like that one. You will find most of the time, if for example, USA using USD and maybe let me give an example of let me just give you an example of GBP. Then you will find USA. I just give an example of GBP because I don't clearly know this this currency of Israel. Don't know if it's Israel what some things like that. So let me just give an example as GBP, right? If you find, for example, like to say USA is gonna strike maybe let me say Israel, maybe Israel they use GBP, for example. You find most of the time from the market sentiment, from what the traders are thinking, you find they're gonna think of US dollar. US dollar is like US dollar. Most of the time, most of the people will try they will be favoring US dollar to gain value, and US GBP to lose value. So if we are trading US dollar GBP, you find yourself US dollar GBP is will be striking to the upside most of the time. Or either if we are trading GBP, GBP USD, you will find GBP USD will be striking to the downside. Will be selling due to what? US dollar is gaining value. Traders are expecting US dollar to gain value. So to simply mean they're gonna be buying US dollar. They're gonna be buying US dollar most of the time. So from the market, so the overall traders' reaction, if they're buying US dollar to simply mean US dollar is gonna gain value. So from there, the pairs which are involving US dollar, they're gonna be selling. You get my point? So live news also acts we need to just be updated with the live news of whatever going on in the market, and we need to focus on the pairs. Just we need to focus on safe haven pairs. Trading safe haven pairs is to mean trading mostly like USD pairs, JPY pairs, uh and CHF. Let me say like USD JPY, USD CHF, and maybe sometimes even gold. Most of the time, XAU, USD, gold. Get my point? Is it clear? And let me say also, trying to avoid high risk emerging market currencies. Most of the time, this is to mean like we're gonna be avoiding currencies which are being affected in the world. Like these currencies which are involving in the world, most of the time if US dollar also US dollar, I don't consider US dollar is only be used in USA, right? Because US dollar is like a base, it's like a base currency, it's like a base world currency. So I want if US dollar, if USA is involving in the world, doesn't mean US dollar is gonna lose value. Doesn't mean right. So most of the time, these countries which are involving in the wars, most of the time they tend to increase in manipulations. The manipulation tend to increase, or is that you will find the bid price, or the brokers, they will try their best to manipulate the market with just use of the word so that they can blame the world, start to blame the world. So we try our best to avoid trading these currencies which are being involving in the war. Either now avoiding such risk is for us just to make sure is for us to just make sure we are setting, we're taking trades, also be setting, trying our best to set tight stop losses because the volatility is going to be high. So we're going to try our best to tighten the stop losses. Gonna try our best to tighten the stop losses. Tighten our stop losses. You get my point? For those who asked me what does the impact affects the forex market, what does the impact affects what does the war impact the forex market? I guess it's now clear. This is a for this is what was my general overview on how, from what I have experienced on what have happened before and what I clearly see in the markets on whatever goes on daily. This is what I clearly understand from the what impacts. I might be wrong on some points, on some things, depending on that's my general point of view. That's my experience from what the war impacts, what is the impact of the war in the forex market. Some have been asking me about that. How will this war? How will we trade this wars impacts? What? This is a general. This is my general understanding on the impacts of the war to the forex market. For those who are asked such questions, this is the clear understanding on it. And I guess it's clear. And hope I have answered the questions regarding that. I hope I have answered the questions. I hope I have answered the questions. Is there any is there any question? Is there any question? I have question. All right. Journalism Historia, you can ask me.
Good evening, everyone. I want to know the meaning of volume and the deviation that we found when we are going to place a new order on MT5. The meaning of the volume and the deviation.
The meaning of